great question. I'm going to get the chart up again because I think this will be useful. We can look at this in a little bit more detail. So the challenge is there's a couple of points here that need to be looked at. And the first one is, when you're on a losing streak, is you have to be clear and define what a losing streak is. Because some traders you'll speak to will say, I'm on a losing streak, and you say, well, how many losers you had? And they'll say, I've only had 2. So in their head, 2 losing trades is a losing streak. You speak to some traders and they're 12 deep and they don't know what they're doing wrong and they're all over the place, and that's enough for them to admit they're on a losing streak. Some traders can be winning and losing, but they say a losing streak and they're referencing it in terms of profit and loss, not winning or losing trades. So it's very important that you define what a losing streak is. So directly to answer your question, how do you manage risk? Well, as far as I'm concerned, I manage my risk the same way when I'm winning or when I'm losing. So I don't suddenly risk more after 3 losing trades to try and win it back. So I don't do martingale or any of these weird and wonderful things where you increase your risk and then eventually the trade goes your way, because the time you choose to do that is the time the trade doesn't go your way and you hit the black swan or the anomaly and it doesn't work. So for me, I will do my risk, my percentage risk per trade stays the same. Obviously, as my account decreases, if I'm on a losing streak, then that 1% or that 2% is less each time. So even though I'm risking 1%, it is actually a smaller amount of money. It's always relative to the size of the account. So me personally, I won't do anything. Now, what's really important on our Kickstart training, what we do is we show you which data sets you need to record, because the challenge is a lot of people who do record data, they're recording the wrong data. So if you're recording the right data and you have enough data, and this is key. So with our swing trading, we have the best part of probably, I would say, getting on for 10 years worth of backtesting data on nearly all our strategies and nearly 8 years of live data. And that's on a combination of 6 strategies, and each trade will probably have 15 data points. So that's a huge amount of data. Now, if you have a really good data set relative to the time that you're going to trade, then there are other options. I've worked with a couple of guys in our trading room where what we've done is we've looked at losing runs and winning runs. We've looked at both losing runs and winning runs, and we've established when those losing runs reach an extreme. So it might be a period of 5 winning trades on the trot. It might be a period of 4 losing trades on the trot. And then what we've got those traders to do is very slightly, not double up, so not be risking 1%, 1%, 1%, 1%, and then on the 5th trade risk 2%. But what we've got is we've got a risk parameter window, we call it. And what we then do is say, well, hang on a minute, after a certain number of trades, you know you're reaching a higher probability of the next trade winning. So you might go from risking 1% to 1.2. Now the risk is you could still have losers, but you're working in a framework of say 0.75 all the way up to 1.25. So you're already within a predetermined risk per trade. So there isn't a best way to do it. I think if you're looking at it from a simplistic point of view, the best thing you can do is keep sticking to what it is you're doing. And only do something like this if you have enough data to back it up. All right. So now I've got